Hello there, guys. Welcome to today's live stream with me, John. Hoping everybody's having a good day so far. We've just had US CPI data. Let's just zoom in a little bit here. US CPI data, unemployment claims came in a little bit better than anticipated by the market. So if we just highlight what we've had here, we've had a little bit of an uptick in CPI month on month and year on year. So we're expecting a 0.2% reading, got a 0.3% instead. On CPI year on year, we're expecting a 3.2. So we're expecting rises anyway. But these have just come in a little bit above those expectations. One thing that was forecast to come in a little bit higher was the unemployment claims. That came in actually lower than previous at 202K. So that's kind of added a little bit of extra sort of bullishness to the US dollar at the moment. And we've started to see the dollar obviously rise. I've just got a couple of news articles that you can take a look at while we're here and have a little look at some data. On Bloomberg, we're reporting the US inflation accelerates, tempering case for Fed to cut interest rates. Now, this is something that we spoke about in previous live streams. Now, the central banks usually cut rates in times of recession or in times of where the economy really needs a boost. They cut interest rates. Now, they have said that there's potential to cut rates in 2024. However, if we start to see the case of CPI starting to rise again, if we see the case that obviously those inflationary pressures are coming back into the market, maybe employment starts to get a little bit better in the US, then that's cases for the US inflation to continue to remain higher. That's a case for the Fed, like it says here, to not cut interest rates, okay, which is something that I didn't expect them to really go ahead with anyway. Usually, like I said, we only see cuts in times of need, and because we've had the soft landing, because we're starting to see inflation rise again, there could be potential for the Fed to leave rates at a higher rate for longer. Okay, so maybe the market is now starting to sense that the Fed are sort of or essentially calling the bluff on the Federal Reserve's dovish tone at the moment. So I want to go check out some of the stock markets. We're going to go check out what the dollar's doing as well. Obviously, we've been bullish dollar yen this week due to the currency strength meter. That seems to have provided a good opportunity for traders. So we'll go recap sort of dollar yen as well. Want to go take a look at the gold market. How is gold being affected by this? Obviously, gold can be used as a hedge against rising inflation. So I want to go take a look at that. Maybe the dollar strength has pushed gold a little bit lower. And we've also got a little bit of data on Bitcoin today. So obviously ETFs coming into things at the moment that have been accepted in the US, and I expected a bit of a jump on Bitcoin today. And now that the US session has come on board, we have started to see a little bit of a rally in Bitcoin. I think Bitcoin's biggest thing is regulation. I think if there was any kind of regulation coming into Bitcoin, then we'd probably see quite a significant rally in the markets. And I'm just going off the back of what has been happened in the past, essentially, with unregulated markets that became regulated. They went to do large sort of rallies. So I'm not saying that Bitcoin is going to have the same thing, but it could. Okay, so we can see that Bitcoin volumes have spiked as well. US trading and newly launched ETFs like BlackRock Inc. shares, Bitcoin Trust, and blah blah blah. So yeah, we've got that to deal with as well in today's session. So hopefully we can get through a lot of this. But thank you for joining me so far. Let me know if you're in today. So I can see Vincent. Good afternoon. Hope you're doing really well. I'm doing great. Thank you, mate. I hope you are too. Let me know what charts are kind of piquing your interest as well. We're going to go over a fair few today, just ones that have kind of taken my interest as well in the market. So let's go flick over to the US dollar index first. One thing that we were talking about this week was waiting for the break above 102.50. The market has been kind of holding around that level. You can see that we've arguably sort of ranged between sort of the highs maybe around about 102.75 down to sort of the 102 level. And this has been this week, really. We rallied from the key lows at 100.75. We came up into that key resistance zone at the 102.50, and we've just gone sideways. We needed a catalyst. The market was looking for a catalyst to drive prices in any kind of direction. CPI could be the thing that has now driven that move. Okay, so we could see if we hold above this zone here that the market may want to move on to the next level of resistance, which will be, I imagine, this zone just through here, anywhere between that sort of 103.50 up to the 104s. I say that because we've had a period of consolidation, strong break to the downside, so there's going to be a lot of volume up in this area for the US dollar index. So I like the idea that if we can hold above this level, that it could obviously lead to a push up towards 103.50. So I'm going to put in a few resistance levels in here. Obviously 103.50 is going to be the one to really watch out for, because that is the sort of edge of the area there that we've got that sort of volume area, and obviously that then can lead up to the highs as well. I can see, looking left as well, there's some highs around about 104.20. I can see all of this area here as well. We've had lots of selling pressure. So if the market's going to continue higher, it could go target these key swing highs, okay, basically because of liquidity, okay, as well. So it could be an option for price to move to the upside. So yeah, dollar on the march at the moment. One currency pair that we discussed in detail this week for long opportunities was the dollar yen. That has continued to push higher. The level that we were really interested in this week was back down at this 103.67 area. Again, I try and think in volumes, you know, where is the volume? And we can see obviously the market rallied, paused for a moment. That would be an area where the market would have built volume. We've then pushed back into that level. We also had confluence with the 50 moving average as well. I like to use the 50 moving average. There's a bit of a dynamic support and resistance, and you can see price has obviously continued to push up at the moment. I did actually look at potentially taking a long back in this area here, but I took that out before the news because I don't like to typically trade news, essentially. I like to let the dust settle first before we get into any kind of sort of trades and opportunities. But we've now come up into resistance. We've got 146.25 on dollar yen. This would be a good area, I think, if you are long in this market, a good area to start taking some of that position out. If I just go to an hourly time frame, the way you could have, you know, potentially traded this move was waiting for price to come into this 4-hour zone of resistance and then looking for the higher high, higher close candle, which would have been this candle here on the 9th of January. That would have been an option with your stop loss either below the zone, or it depends on how aggressive you want to be, 80 yard stops. That still would have given you a nice 3-to-1 return there this week, which is very good. So there was also a nice head and shoulders pattern in there as well for those pattern traders. You can see head, right shoulder. So you have the left shoulder, the head, and the right shoulder. Okay, so here we can see, oops, that's a circle. I didn't want a circle. I wanted a line. Break of that neckline as well. Breached above the 50 MA on this hourly chart in here. Okay, and then the market has took off to the upside. So multiple ways of how you could have got involved with this market. Obviously, you don't always have to look at sort of the higher high, higher close or anything like that. You can look at patterns. You can look at sort of volume levels. So let's just pop on a volume profile. I just want to see where volumes were sitting in and around that area. So you can see the large volume build up in here. The point of control was 143.25. So price hasn't quite come and retested that point of control, but you know, volume profile works a bit better on futures markets and whatnot. So where you've got raw data or centralized data essentially, and we haven't really got that here. So you kind of look at more the range of the volume there, and you can see we came into that volume range and the market has continued to push higher. So yeah, I think this is a good area to start unloading some of those positions at 146.25. Obviously, the market could breach beyond this. I think that's quite a strong possibility. We also have to be a little bit careful because there is a potential for the Bank of Japan to raise interest rates this year, and that could obviously cause the Japanese yen to get stronger. So we do also have to be aware of that. So, but we're not really seeing those conditions being met just yet. We need to see some more evidence before the BOJ consider any kind of moves. We may even get a situation where the Bank of Japan do nothing again, but other central banks move. And obviously, dollar's not going to be one of those, I don't think, at the moment, due to the fact that obviously we've just got that uptick in inflationary figures. So are we going to see a continuation here on dollar yen? I would like to be long if we can continue to trade above key levels of resistance. So 146.25 is the next barrier. If we breach that, close above that, we could head up towards 148.35. And obviously, if it continues, we've got other levels of resistance as well on the way up. So dollar yen is still definitely one to look for. Strength meter is suggesting that the yen's continuing to weaken as well. We can see that across the board. If you just open up your watch list, whether you're on MetaTrader or whether you're on TradingView or anything like that, one thing that I like to do is just kind of single out the currencies or the currency pairs. So I can see Aussie yen there, CAD yen, for instance, Euro yen, and pound yen, and we can see what's driving the move. If everything was sort of offside against the yen, then I would suggest that it's a yen driven move, but it's not at the moment. It's definitely dollar driven. We know that because data's just dropped, and also if you look at the dollar complex in here, you can see dollars up against the Canadian dollar, the yen, Kiwi, Aussie, pound, euro at the minute. So definitely a dollar based move at the moment. So if we can see a continuation above that, good dollar data continues, then we could see a move up towards that 148.35 in the near future. So yeah, dollar yen was a big part of what we were looking at this week for long opportunities. Another one of those was opportunities on euro pound, as well as pound yen. Just kind of reviewing euro pound, I'm out of my positions here as well. Came out with a very, very small loss. I got just a little bit bored with this one, I'm not going to lie. The market came into my level of resistance. It decided to, take off. It then came all the way back again, took off again, came all the way back again. I just didn't see any kind of sort of continuation here at the minute. So I'm just going to continue to watch euro pound. I do think that it could come back down towards 0.8550, but because this market was this week, I've ended up just putting my money elsewhere. One of those moves was pound yen to the upside, and this is something that we discussed in our live stream on Tuesday. Again, I like the idea of potentially looking for longs as long as price stayed above the 182.83 handle here. And again, that was just kind of looking at it in terms of volume. The market was building volume between 182.80 and the 184 handle. And if the market is going to sort of hold and move higher, then we shouldn't really see it break into areas of low volume. Low volume areas can be seen like this in here, where you have very aggressive buying actions going on, or obviously selling. If you're looking at it in the downside, this would be very aggressive low volume in here, for instance, and in here. So typically, if the market was going to push back and close back within this area, then I would expect price to go and seek another area of volume, which would have been towards this 182 handle. But it didn't do that. Instead, it held at 182.83. I went long. I banked at 184 because that's the sensible thing to do. Bank at previous highs. And then prices obviously continued to push through to the upside. So I do like the idea of pound yen continuing to move to the upside. If we look at the daily chart here, there's some good possibilities that we're going to reach back up towards the 188 handle again, perhaps even into this area here. You can see there's a bit of a sort of pause. If we just go to the 4-hour time frame and zoom out, there's this kind of consolidation in here. So I imagine if I was to draw a volume profile tool down to, let's say, this swing low, just to have a little look at that sort of area, we can see that there's a high volume level around about 187.12. You can see the volume starts to pick up around this area here. So there might be something in that. There might be a little bit of resistance in here that the market may want to come and sort of retest. And then, you know, that could be a good area to look to take some profits off the table if you are looking at being long pound yen. How I would look to potentially get into this move now, I'd need to see some kind of support being made and then look for a price to come back into that support. At the moment, I can see we're building a bit of a base around about 185. Was that 185.20 up to sort of 185.50. So I think if we were to see price rally, kind of pull back into this area here, you've got the 50 moving average that could come in and add that confluence as well. And if we start to see some sort of changes in trend here, or, you know, a higher high, higher close candlestick on a 30-minute time frame around that zone, then that would be good enough for me to start looking to get back into pound yen on the upside. If we breach that, then we're probably going to come back down and test this area of volume towards 184, and I'll just look for the same again as long as the conditions are still there to do so. So yeah, that's going to be something to look into as well. Obviously, pound yen a nice market to look at fundamentally as well, even though the Bank of Japan could hike interest rates. I think that the other central banks could move first. Pound or the Bank of England might keep theirs a little bit higher, although inflation has started to come down in the UK. It's still a little bit higher than everyone else still, so we could still see the pound continue to strengthen in the short term. So there's definitely something to kind of take a look at with the pound at the moment. Let's go take a look at gold. Hopefully that makes sense so far, guys. If anyone has any questions, fire them away. Let's go over to Bitcoin. So obviously Bitcoin, a market that's moving at the moment with those ETFs have come in. So maybe a little bit higher volume coming into Bitcoin at the moment. Now, if we go to a weekly chart, we're coming up into an area of resistance here, which I didn't think would act as resistance that much, to be honest. With the sort of context of the market at the moment, I think that we could drive higher. I wouldn't be surprised if we did see Bitcoin back towards all-time highs here. Obviously, probably be a little bit of a shock to the system for a lot of people, but there's still a good potential for growth there. That is still sort of a 36% rise in here that could potentially happen for Bitcoin. What I like the fact is that we've had this consolidation and we're breaking consolidation. You know, I'm a big fan of consolidation areas. Shows us what buyers and sellers are doing, and you know, now price is breaching higher. If that came and retest, it could offer traders an opportunity to get long. Remember, you don't have to trade Bitcoin and get sort of cryptocurrency exposure. You can trade the CFD through Blueberry markets as well. So that kind of keeps you away from having to hold anything or in anything in sort of digital wallets and things like that. So there's availability to trade cryptos without necessarily having the exposure to it. So yeah, there's potential there. Obviously, Bitcoin to continue to the upside there. I'm quite disappointed that I didn't get involved in and around this area here, which is a support level we pointed out before. But we'll see. We'll see if we get any kind of opportunities. I can see we've had a bit of a sort of break and test area going on here, or situation going on there with a bit of trend support. So I'll see if there's any kind of opportunities in line with that in the near future, because price is kind of coming up into those areas of support and resistance at the moment. Rehan, let's look at NASDAQ. Yeah, let's go take a look at the NASDAQ. I do want to look at the stock markets. The Dow in particular is something I'm pretty interested in at the moment. Obviously, we are trading at all-time highs at the minute. If I go to the daily time frame, we're kind of back into that area here. COP reports actually showing quite a heavy sell position coming in on the Dow at the moment. So there could be a possibility that the Dow could start to push a little bit lower. Very heavy selling going on at this current moment in time. So it'll be interesting to see how sort of higher inflationary pressures will affect the stock market going forward? Will this kind of put back any kind of potential rate cuts, which could be a little bit more negative for the stock market at the moment? I think the market has ignored pretty much anything to do with sort of the Fed being too dovish at the moment. But if they sort of go into a position of where they have to hold rates at a higher period for longer, that could put a little bit of pressure on the stock market, and we could see a little bit of downside. So the Dow, definitely something to have a little look at. NASDAQ, also kind of coming back up towards those key highs in here. If we look at the weekly chart, we did have a poor performing week last week, with those sort of losses have been absolutely sort of erased for this week already. Looking at it, you know, I kind of feel that there's a potential for maybe some downside to the stock market. You know, there is the sort of swing of the fact that we had that sort of employment data, which was pretty good. So I do like the idea of being short stocks, but at what cost at the moment, I'm not too sure. Selling stock markets and indices can be fairly tricky, or used to be fairly tricky. But yeah, I think if we get any kind of rejections in and around these previous sort of highs that have been formed, you know, maybe sort of funds will be looking to take profits in and around these areas. That could be an opportunity for a retail investor to try and sort of trade back towards kind of key lows. You know, if I wanted to be long stocks, you know, I want to be long at lows, and 16,250 would be something I'm interested in, perhaps even down towards this area in here. So yeah, but yeah, NASDAQ, S&P 500, the Dow really interesting with those commitment of trader reports. So yeah, I quite like the potential for some downside in the Dow. If Ron, I can see, afternoon, John, just got stopped on dollar Swiss just now. Sorry to hear that, mate. Dollar Swiss kind of pushed back to the upside a little bit, didn't it, with that data? Yeah, just consolidation at the moment. The Swiss franc is a sort of, or was a stronger currency at the start of the week, but it was in that sort of reversal zone as well. But I didn't really focus too much on the Swiss franc. The only one I liked really was Swiss yen long. I don't know how Swiss yen has performed, to be honest. I haven't looked at it. But yeah, the dollar getting stronger, Swiss franc getting stronger, you know, kind of screamed to me that we probably would get a bit of a range this week. But, you know, shorts in at range highs, not necessarily a bad thing. You know, the market could continue to sort of range like this for a period of time. So yeah, it's just news events like that can cause a little bit of spike in this, can't they? I do like to try and get even before we go into any kind of big news events. I like to take everything off the table if I can, unless I've got something that's kind of I've got good exposure to. But yeah, that's an unfortunate one there, I feel. In front as well, yeah, do like short in the FTSE. Yeah, let's go take a look at the FTSE as well. Yeah, we kind of came up into that area of volume up here at 77.65. We rejected. Still waiting really for that break. We've kind of tried to break through, but as we've tried to break through, we've not got any consistent closes below that level that we were looking at before, which was around about 76.80. And we're still just kind of range bound, aren't we? The market is still kind of in that sort of area. I think if you're going to get short, breaks below this area are kind of important at the moment, because we're starting to obviously see buying coming back in as price gets a little bit lower, which is not something you want to be sort of short selling into, I guess. Other markets that have been quite interesting as well. Let's have a look at the Nikkei, because the Nikkei is flying at the moment. If we actually just go to a weekly time frame on the Nikkei, we've broken out of these highs here that had formed back in 2023. I say back in 2023 like it was ages ago. But obviously it was only a month ago, or less than a month ago. But yeah, you can see we had this really strong resistance level that developed back in June. kind of held in November as well as December. Now we've seen the Nikkei shoot straight past through that. So again, very interesting. The Nikkei is not doesn't really reflect the sort of impacts that it could have on the Japanese yen usually. There are other indicators out there that are a little bit better for that. But obviously that's telling us at the moment that the Japanese stock market is doing pretty well, and we're starting to see some big gains there. So whether that will continue will be also interesting. How do you call a top in a market that just keeps going? That's one of the things that I think if people are trying to get short on, could easily find themselves in a little bit of trouble. So yeah, I'll be looking at the Nikkei in a little bit of detail. If this market's going to continue to expand quite aggressively, then there could be some interesting developments here as well. Let's have a little look down the list. Like I said, the only real markets I was interested in this week was dollar yen, pound yen, euro pound. I did think that maybe one to watch soon could be CAD yen. Purely if we get back up towards the 110s, maybe even the 111s. The reason why I like the potential for CAD yen is because I think the Bank of Canada will be the first sort of central bank to cut rates, which could have a negative impact on CAD. With that being said as well, the yen, Bank of Japan, considering maybe moving out of the negative interest rate realm. So could this be one to watch in the future? Obviously price is rallying at the moment, and I expect that to continue. There's no reason for us to look at any kind of yen strength just yet. But if we start kind of tipping into sort of the 111s, could this be a good area to be kind of looking for that sort of potential move on CAD yen? But at the moment, it looks like it's fairly strong here. We're starting to see that kind of push up in the market. Again, I'd be sort of highlighting areas of support and resistance on this. I can see consolidation being formed in here. Is that going to be an area of support if price was to come and retest it before seeing a continuation? But yeah, CAD yen as well. I'm definitely keeping my eye on this. I want to see it kind of hit into the 111s first before I kind of look into anything like that, to be honest. Let's have a look around the grounds, so to say, in footballing terms. Gold. Let's go have a look at gold. I haven't really had anything to do with gold too much recently. I did take a short trade last week on gold, and that was based off the fact that we we formed that sort of bearish sort of candlestick here, where we kind of came back up, retested the sort of $2,087 area we kind of closed back within the previous week. I saw that with them price broke through the previous week's low. I ended up going short on this market. It was only a very, very short term trade, but we also had that kind of head and shoulders that was pointed out as well in one of the live streams. So you can see sort of head, left shoulder, right shoulder, and we also kind of breached that as well. So I ended up going in short in and around this area here, I believe, or it might have been actually here, that little area just through there. Ended up going short in and around that area down towards these key swing lows. But we've been pretty range bound ever since we've come back towards that $2019 area. We've kind of been a little bit range bound here. Again, the market can sometimes use gold as a hedge against inflation. So there might be a little bit of a sort of battle here going on between that sort of dollar strength and as well the fact that we could be seeing gold being used as a hedge for inflation. So consolidation, again, I always think is a good thing. And in terms of consolidation, what I can see from the chart at the moment is we obviously had consolidation down in this area in here. which again is build up of volume. We've then had low volume created, and then price has been building volume between these two areas here. So this is obviously an important level. I think if we breach below this area here, then we're going to fill that sort of low volume area back towards that sort of 1990. If we don't, and we can stay above, there's a possibility that we might see price breach $2,040, maybe get back above that 50 MA as well, retest, and then we could see gold head back towards at 2087 highs. I'll have to check the COT reports on gold. I actually haven't looked at the COT reports in a minute on gold. So let's go. Let me just grab that, and you can just keep looking at the chart there for a second. Current traders. Let's have a little flick onto this. Sorry, let me put this on the screen properly. Get rid of. I didn't mean to do that. Right, here we go. So we've got energies, metals. Let's open gold up. Okay. So we just want the legacy. Let's actually go to the COT chart. Let's have a little look if anything's kind of changed here. One thing that we did want to see is obviously a move up towards the extremes. Again, that's how I like to use commitment of trader reports. I like to look at where the extremes come into play. So for those who haven't been into our live streams before, so I basically will look to highlight the extreme in the market and then look to see if there's anything that we can look at in terms of that. Obviously, there was an extreme recently, an extreme short when we came into these May lows. So essentially the way it can work is from just experience and from what I've learned over the years of commitment of trader reports, you can look at it from sort of a 6-month view, 18-month view, and a 36-month view. Okay. Now, obviously, if we get a short signal on a 36-month view, then there could be a very strong signal. 18-month is very strong as well, and so is the 6-month, but obviously not as strong as these two in here. Now, obviously, if we haven't seen this extreme shorts essentially on gold since May of last year, then we obviously had a sort of bearish signal recently here, and obviously price has sort of reacted to that, and that has obviously coincided with fundamental data as well. But that would be our sort of 6-month selling in here, which is also coinciding with that sort of resistance level in here. So it'd be interesting to see if we continue to see gold sell off here. If we do see gold sell off, then what you'll see from the commercials is some buying, okay? Because as price gets cheaper of gold, it's cheaper to do business, so they will buy more gold as price moves lower. Okay, if they feel that this is a bit of a top in the market, then obviously gold could continue to push lower, and it'll be interesting to see if we get back to sort of these areas here in terms of contracts on the commercial side of things. If we get into sort of the negative territory of seeing sort of the extremes back in sort of March, April 2022, then, you know, and gold may be back towards the 2,100 level, because gold prices will need to rise in order for commercials to continue to sell aggressively. So if we were to kind of come back towards that $2,100 level, come to that 36-month, well, it wouldn't be 36-month, but sort of 18-month sort of extreme there, then that could be a potential then to see a continuation of some really negative gold pressure at the moment. But obviously we can see the two lines here. The two lines basically mean that you've got, sorry, watch is going off. You've got the commercials, non-coms. Non-coms are trend followers, okay? They're like large funds. So as price moves to the upside, they'll be buying, okay? So that's probably why we've seen recently that they've been buying into this move in here, okay? as the market moves higher. As the market moves lower, commercials who are in the market for business purposes, okay, they will be buying as price moves lower. Okay, so that's why I'm thinking, are we going to get into these points here where is the commercials going to start buying a little bit more and our price is going to start sort of retracing? Okay, yeah, but it'd be interesting to see if we come lower towards $2,000, maybe even the sort of 1950s again. That could be quite interesting from a gold point of view. If we just kind of putting this back on the charts like it is, like I said, that would be sort of coinciding with the sort of 1975 area. I think if we were down here, that would be potential for a good sort of buying opportunity. But like I said, for commercials to continue to sell aggressively, price of gold needs to rally. So I think if we breached $2,040, then gold may head back towards that sort of 2,080 area, where we could then potentially see that sort of commitment of trader effect come into play. Lorato, can you take a look at Aussie yen? Yeah, absolutely. Is there anything you're looking to do on Aussie yen? Are you looking to buy, sell? I haven't looked at Aussie yen in a little bit, so I might have to refresh the charts here for a moment. Let's just pop back up to those weekly charts. Zoom in a little bit. So this is obviously going to be a big area of importance in here. And we've got these lows. I can refine these in a moment, but those are going to be 2 points of interest for me. Sort of 98.50. We've got support. I'm going to put 94.50 on support. Might be a little bit ambitious there. Let's put that as a support point. Go down to the daily chart and see if there's anything for us there. So I'm going to refine this a little bit. Might extend that up to 95 on the coordinates. Yeah, Aussie yen's interesting, isn't it? Obviously, there was a bit of resistance here prior, which is around about 97.50. We closed above that, so that's quite a strong close above, I would say. Interesting to see what develops here, though, because if we get a close back within that resistance area, you could say that prices ultimately made a false breakout of that level, and that you might see prices decline here, maybe back towards this minor daily sort of range here between that sort of 96 area, 97.50. If we can hold above that, then I don't see why price couldn't try and make its move a little bit higher. Also depends what your feelings are around the sort of Australian dollar at the minute. I know the yen's obviously a little bit weaker. Haven't really looked into Aussie too much. I was also short Aussie last week, but obviously out of that position now. But we can see here a bit of consolidation. So yeah, I can't really see much support there at the moment. Let's have a little look in terms of volume. So there's some volume towards sort of the 97 area here. I'd want to see price kind of make a low. I think if we can kind of see it hold here, then, maybe push a little bit higher, come back, retest. If it can kind of hold that, I think that would be interesting to see a move up to 98. What I would be concerned of is that daily chart. We've had a strong push up yesterday. Doesn't mean that price isn't going to continue to rally here. But if we were to get a close back within, that could be a sign of a false breakout and a potential move down to sort of that 96 area again, if that makes sense. Right, are there any more questions, guys? We've gone for about 40 minutes now. Usually I like to go for about 40 minutes, 45 minutes. So I think that's all from me, really. Obviously, really interesting in the market at the moment. Like I said, Bitcoin could be a very interesting sort of market to look at the moment, especially because of the ETFs. Inflation in the US, obviously a big important thing as well, considering the fact that, you know, the Fed could not cut rates by the end of this year. And that could obviously put a bit of upward pressure on the US dollar. At the moment was trading back at 102.46, so back below that 102.50 level. So it'd be interesting to see how price develops here in the next couple of days or so. I know tomorrow we've obviously got some core PPI data as well. So if we see an uptick in core PPI as well, we could possibly see a continuation in that US dollar strength. So it'd be interesting to see how the market plays out. Maybe the market is waiting for 102.50 to break, or waiting for the PPI data to come out tomorrow before making a decision on that. So keep an eye on that. Have a safe end of your trading week. Again, thank you for everybody that asked a question. Vincent, Rayman, Ifran, Larato, thank you very much for your comments and questions. Really appreciate that. If you are new here, then subscribe to Blueberry Markets, and I will catch you in the next live stream on Tuesday next week. So cheers, guys. Thank you.